Hey folks, it's Simon here with your Tao Daily video for Monday the 6th of May 2024. We had a lot of excitement on Friday following the weaker than expected jobs number. I talked about this on Friday before the number came out. I said if the number's weaker than expected, markets will rally. That's exactly what happened. So the market was expecting a number around about 240,000 new jobs, came in at 175,000. So what does that do? Well, it's brought back the prospect of a rate cut potentially in July or September. But it's important to note that this was a weaker than expected number. It wasn't a quote-unquote weak number. 175,000 new jobs for the month is still pretty good, all right? So it does not bring 6 rate cuts back onto the table. It just kind of accelerates the prospect of the next rate cut. So markets may have got a little bit over their skis here. You can see we had a nice gap up on the S&P here, and it's run into its 50-day simple moving average, which is the line in the sand between a medium-term uptrend and a medium-term downtrend. So big decision point here for the S&P. Is this going to be a breakaway gap or an exhaustion gap? Well, we'll know by the end of the week. What's interesting is the NASDAQ, or the Qs, is also stuck right at or just under its 50-day simple. If we look at IWM, which tracks the Russell 2000, that is also sitting right on its 50-day moving average. And if we look at DIA, which tracks the Dow, lo and behold, right on its 50-day moving average. So like I said, big decision point for equity markets this week. Will this prove to be a breakaway gap or an exhaustion gap? The 50-day moving average often does act as a point of medium-term support and resistance. You can see in this little pullback we had, or it was a 10% pullback between July and October last year, it kind of acted as resistance. If you look at the bigger decline we had in 2022, it acted as support and resistance, but the 200 was a big one here as well. You need to watch the interplay of these two moving averages. So we had a big rally up here, came in and touched the 200. Now, bear market rallies can be squirrely. Okay, this one was pretty powerful. So is this one, in fact, but obviously the 200 put a cap on it. But just highlighting that these simple moving averages can provide strong levels of support and resistance. The other thing just to point out is that when the S&P is in a downtrend, and when I'm talking about a downtrend, this is when the momentum bars are predominantly red or yellow as opposed to green, often the RSI will cap out at about 60. All right, it'll kind of fail there, and that's sort of right where we are at the moment. And this little pattern here, it may end up proving to be a bear flag. So in summary, if markets are going to rally back up to previous highs or new all-time highs, we're going to need to see some bullish follow-through this week. And if we don't, that really kind of opens the door to the idea of another leg to the downside. And the S&P, NASDAQ, Dow, IWM, all looking pretty similar here. That's what I got for you. I hope it helps. I'll catch you tomorrow. Thank you.